Hey, good morning, guys. Got another video, and this video is going to be geared towards the people that are really interested in refinancing their vehicle. Now, we're going to talk about something called your loan to value ratio. Your loan to value ratio, or your LTV ratio, it's honestly just as important as your credit score. It's just as important as your debt to income ratio, your job history. It is a huge portion of whether or not you're going to get approved for your vehicle refinance. Now, before we jump into this, I really want to say one thing, and that is thank you to all the people that have emailed me that are really interested in refinancing your car. I mean, I started this channel to help people out, and so to actually get an opportunity to help people directly means a lot to me. So thank you. Now, if you haven't done so, but you are interested in looking into refinancing or building credit, or you just have basic banking questions and you feel like you don't have a representative at your financial institution that you can speak with, reach out to me, comment below, send me a direct message through my channel, email me at commonsensemike@gmail.com. I would love to hear from you. I would love to try and help you out if I can. Again, this is why I started this channel, so thank you guys, and if you're interested, please get in touch with me. So, back to what we were talking about, LTV ratio. What the heck is it, right? That means how much is your loan compared to the value of the actual vehicle, right? Your LTV ratio. So banks look at this because it is going to be an indicator of how risky is this loan. Your credit score essentially shows your ability to repay things in the past and how you kind of handle your loans. It's a score that essentially determines whether or not they trust you as a lender. Now, on the other hand, your loan to value ratio will determine how quality of a loan is this, right? So let's pretend that you've got a friend that says, hey man, I want to borrow money because I want to go buy like a watch or something like that. Who knows, it doesn't really matter what they're buying. The point is they want to borrow money from you to go buy something. So they're like, hey man, I need to borrow like $200. I'll pay you back in a month, and if I can't, man, you can have the watch, right? Because that's kind of how loans work, right? You're borrowing money from a bank to go buy something, right? When you buy a car, it's not really your car. If you can't pay, the bank's gonna come take it. So you got a friend that wants to borrow some money, and let's say it's like $200, and he says like, look, if I can't pay you, right, you can take my watch and you can sell it to get your money back. And so you do some research and you find out that the watch is worth $100. So if your friend can't pay you back and you take this watch and you have to sell it to get your money back, you're only going to get like $100 back. Does that sound like a good deal to you? To lend $200 for something that's worth $100? No, not really. So as far as a loan to value ratio goes, in this specific scenario, it would be 200% loan to value ratio, meaning 100% of the value is $100 because that's what it's worth. So the loan to value ratio is 200% because he's asking twice what it's worth, 200%. Now, this is kind of a cheesy example, but it illustrates really what it is, your loan to value ratio. Your loan amount compared to the value of the car, right? So if anyone is interested in refinancing, they really, really need to look at this. It's going to be a major factor in whether or not you get approved for your vehicle refinance, and I would much rather you know this information going into a loan application rather than finding out afterwards. Like, it sucks to be declined for a reason that you didn't even think of, right? So go in knowing what your LTV ratio is, and how to find out what that is pretty simple. You can go online to NADA guides or KBB. Just go online, Google, average trade-in value, right, for NADA or KBB, and you can just plug your vehicle information in. It's really simple. They're going to ask for like the year of your car, the make, the model, what options it has on there, the mileage, and we'll tell you what your average trade-in value is, and that's the number you want to go by. Your average trade-in value, not clean retail or anything like that, but trade-in, okay? Because that more than likely is what the lenders are going to use to determine what your car is worth. So you go online and you find out the average trade-in value. Once you have that, compare it to what your actual loan amount is, okay? If your loan amount is $10,000, but your car is worth $8,000, then that would be 125% loan to value ratio, meaning it's worth $8,000, you owe $10,000. the loan is 125% of the vehicle, right? 100% would be 8,000. But it's 10,000, which is 25% more of 8,000, so it's 125%. Now this is not good. You want to be beneath 100. You want to owe less than what the car is worth, right? That's ideal. Now, does that mean that everyone is under 100% loan to value? No, not really. Sadly, I'm not trying to be mean when I say this, but a lot of people that get screwed over by car salesmen or car dealerships, they're going to owe way more than what the car is worth. And that's when it becomes difficult to refinance your car, when you have a loan to value ratio of 150%, 160%, heck, even 130%. It's hard to get approved. And really, at the end of the day, guys, this should make you mad, right? Because if you're in this situation where a car dealership has just screwed you over to make money and they've left you in this position, it's going to make it really difficult for you to refinance, because the bank doesn't really want to take on that risky of a loan, right? Why would they want to lend you money for something that's not worth as much as what the dollar amount they're giving you is? So if you are interested in refinancing, you need to find out what your loan to value ratio is. If you need help doing that, you can email me. Like I said, I love to help out with this stuff, but it's super important. Even if you're not thinking about refinancing, I would think it's a good idea to plug your vehicle in and compare it to how much you owe on there right now. And if you're upside down, if that loan to value ratio is more than 100%, really start working on that. Because what if you're involved in an accident and the insurance company says, here's a check to pay off your loan, right? Well, what if it's not enough to pay off the full amount? What if you don't have gap insurance, right? What if you don't have gap coverage? It's not a good situation to be in. So I hope that explains things as far as what this kind of mystery LTV ratio is. It's very important. It's not difficult to understand, but it's very important to understand. As always, like, subscribe, comment. I appreciate those that have done that so far. But again, thanks for watching, guys. Have a good day. Hey guys, thanks again for watching this video. I hope you learned something new from it and you were able to strengthen your financial position. I'm going to keep coming out with more videos, so please stay tuned. But go ahead and like, subscribe, comment, and have a good day.